Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is January 26, 2013. Lots to talk about, so let's get started. So I'm going to try a little bit, something a little bit new today. I'm going to try and sell you my 7-minute market product here and make you guys go to my 7-minute market update website and try to see if you guys would want to join for, I don't know, 40 bucks a month. How's that sound? Let's see if I can do that. All right, so let's get started here. This is the chart of the SPY, which is the ETF that tracks the S&P 500. And like I told you before in other videos, if you join 7minutemarketupdate.com, you will make money. Okay, you will profit. If you don't join 7-minute market update, then there's no way you're gonna make money. It's impossible. It's gonna be a gamble. You're just gonna go to Vegas, you're gonna put down money, and then 50-50 chance you're gonna make it, and more than likely you won't. Just like Vegas is probably more like a 60-40 chance. If you join up here with 7-minute market update, 40 bucks a month is all it takes, and I will give you these mathematical calculations here that nobody else in the world has, and they seem to work time and time again, and they never ever fail. Okay, never fail. When I say it's going to do something, it will happen. When I say to go long, you go long. If I say to go short, you go short, and you will make money. Let's look at Baidu. I called Baidu in the previous video at 114.25. It goes right into 114.25 and bounces right off of it. And if you had taken this short just like I did, then you would have made tons of money and you would have been sitting pretty. You know, you can have a full-time job. That's up to you. You can work for the man, but for me, I rather work for myself. I rather make my own money. I rather buy my beach house, my Lamborghini. I rather do what I want to do, have the freedom of being on a of doing what I want to, and just enjoying my life as I should be. If you want to learn how to trade like a professional, I will tell you how. I'll explain it to you in detail, give you all my secrets, give you everything that you need to know to be a successful trader. Feels like that you don't know what you're really doing. It's okay because, you know, most people are new to it. Most people think and build the confidence and they think that they know what they're doing until they figure out all of a sudden they just don't have any money. Every single up here I shorted, up here I shorted, down here I went long, down here I went long, up or down, I can make money for you. Okay? That is what 7-minute market update is about. Go ahead and join. It's only $40 a month and you can cancel it anytime. Alright. Well, anyways, I figured I'd give that a try. There's actually no such thing as a 7minutemarketupdate.com website that will charge you $40 a month. Again, these things are free. I just wanted to see if I could be a salesman like those guys out there on the internet right now making tons of money off of you. People like you who, fall victim to these um, things that people sign up for. It kind of bothers me sometimes that, I mean, if you think about it, if these guys are so good, so much of awesome traders, if they're that good, why do they need to charge people for them to come to their website? I mean, that's how they make their money. I mean, if you got, I don't know, 1,000 guys signed up for your website paying 50 bucks a month, I mean, that's $50,000 a month. I mean, that's how they're making their money, right? So, and you're gonna hear claims about, we have to charge in order to pay for the service and this and that. And, unfortunately for them, well, I guess fortunately, but for myself, because I am in information technology, I know how much these things cost, and they don't cost $50,000 a month to host a server and a website. You can pretty much do that for free. Anyways, I'm ranting. I just saw a lot of it just kind of bothers me that they charge you guys to do all this, and it's a really simple concept on how to trade, in my opinion. I mean, I'm not saying my methodology is any better than anybody else's, but I do okay, and it's free. And I do have these calculations here that I still have that are nameless. I haven't put a name on it yet, but you know, and they're free for now at least. Until I get, I guess, tired of making these videos. I don't know. In any case, let's get started. Um, Here's a real video, and I guess I'm not a very good sales guy either. Yeah, I mean, hey, I tried. I figure I give it a shot. This is obviously the chart of the SPY, which is the S&P, which is the ETF that tracks the S&P 500. So let's just go through what happened this week here. All right, so we had this 149.51 mathematically calculated level here. All right, so the problem with this, okay, mathematically calculated level, and you guys all know how these mathematically calculated levels work, and I try and I hope that you guys all know how to determine, for the most part, what it's going to do. Let me give you an example. For the most part, the 149.51 level or any other level that you see on here now, and I know you see a lot of lines, so it could be like, oh, I can draw a line on a chart and eventually they're gonna bounce off of it. Excuse me. I can draw a lot of lines on the chart and eventually the market's gonna bounce off of it. I mean, it's just pure luck. Well, I guess you could look at it that way, but obviously they're not. I mean, the support and resistance, they hold up. The only reason why I have these lines up here is because the market's just been going up, 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 and up. So because these used to be previous resistance, these lines are obviously going to be pretty good support. Okay, but I'll eventually clean it up so it looks a little better for the newer members here. Sorry, I don't mean to call you guys members, subscribers, I should say, YouTube subscribers. Which, by the way, if you subscribe and I happen to release a video, in the middle of the week, even though I haven't done that, but one day I will, then at least you'll get an email, you'll get alerted that I posted a video. And normally if it's a mid-week video, it'll be a really quick video because it'll just be like an update of what I did or what I didn't do. But everybody knows pretty much when you watch my videos what my rules are and how strict I am with my rules. And I'm going to give you an example today of one of the reasons why I'm strict with my rules, okay? Alright, I'm switching to the 10-minute chart here on the SPY, and what I wanted to show you once I zoom in over here is as soon as we came up into this 149.51, I think the high of this candle was 149.50. The next candle was 49. Okay, so I missed it by 1 cent. So yeah, these mathematically calculated levels, they're a little bit off. They're not perfect, right? I mean, I've never claimed that they were, and I'm telling you now they're not. We got that pullback on the intraday. So how do I know, or how do I know if this is going to be an intraday trade or a multi-day trade? Well, let's take a look at the daily chart once more again. But before I do, let's just continue on with this 149.51 level. The next day we pierce through it, we come back down, and then we go back up in a single candle. We retest it, come back down again, come back up, we retest it again, come back down, we retest it, we break through it, come back down, and here's another thing. Any level here, you're either going to get an intraday pullback, a multi-day pullback, or a gap. Okay, and the gaps can happen at any time, right? So again, we go right back into the 149.51 level, which is pretty interesting because this candle was 2 cents off, and then we gap above it. We come back down, right? So this is the gap part. We go right into the 149.51 level again, and then bounce off, come back down into the 50 moving average, and then now we're back higher, and this is the 10-minute chart. So you can see how this mathematical calculation is definitely something that works. There's no way I could have called this 149.50 level any other way other than this mathematically calculated level. So, subscribe. It doesn't cost you anything, and you'll get these mathematical calculations at least once a week, hopefully. Alright, so switching back to the daily, why wouldn't I have taken that trade? Well, if you look at this candle here, I mean, just draw a line straight down. That's this volume candle right here. Okay, you notice that this candle here has no volume, right? Remember how important volume is. Volume validates price. All right, these two candles are up candles, and the volume is decreasing, that tells me that that's manipulation. Okay, and again, you can bitch and moan about manipulation in the markets, but the manipulation in markets has been manipulated since the markets were open. It's just now being publicized as, our politicians manipulating the markets. If you can't deal with that, then obviously you shouldn't be trading because it's always going to be there. Always. What you have to do is accept it, learn how they do it, and then trade based off of it. Okay, so now we learn that this is manipulation, right? And it's not always, but that's one of the signs that you can tell, right? All right, so the next day, which is Thursday, we actually pierced through the 149.51, but then it seems like that it holds because the close of this candle is 149.41. So you can see also again how this level is still holding the 149.51. Now, again, just because this is a mathematically calculated level and they hold pretty well, it doesn't mean it's going to hold multi-day. For example, here we had a pullback intraday, a pullback intraday, a pullback intraday, another pullback intraday, another pullback intraday, and then eventually we break through to test the 149.51 from 147.05. I'm going to try and talk a little bit faster here because I'm eating up a lot of time. All right, so to make a long story short, we got that pullback today. On Wednesday, we got that intraday pullback on Thursday, and then Friday we break through. So why didn't I take a trade on Thursday? Because this looks like a shooting star candle. It would make sense, right? And it's on higher volume, right? Well, basically the bottom line is it wasn't higher volume than the past 2 days. Remember, my rule is the volume has to be higher than the past 3 days, and that didn't happen. That's a warning sign. That warning sign keeps you out of trouble, and that's why I do these. I am so strict because on Friday the market continues higher. Now I'm gonna contradict myself real quick here. Contradict myself, okay? Even though it is a rule and you should not have taken that trade and that would have kept you safe, I still took this short trade by buying some SDS. Now sometimes when you're unsure, such as and you get kind of excited and you just want to get into the market. I'm only human. I'm not ever claiming that I'm a professional. I'm just saying discipline is very important when you trade stock market, and discipline meaning following your rules. Sometimes when you can't do it, you can't think straight, or you're really sick like I am. Yeah, I'm just using that as an excuse. What you can do is you can pick up some shares, but just don't go your normal. Like for example, if you use 10% or 15% of your capital in any one trade, maybe go 7% or maybe 5% instead. Cut it in half. If you go 50% of your capital on any one trade, go 25%. I highly wouldn't recommend using 50% of your entire capital in any one trade. I would only recommend 10%, and the reason is, okay, think about it this way, right? Say you only use 10% of your capital, okay? Let's keep things in perspective here. Let's just say you have 100,000. I know a lot of you probably don't have that much money, but let's just to make it an easy theory to say here. Say you have $100,000. You only use 10% of that in any one trade. That gives you 10 trades per capital, right? So you have $100,000. You use $10,000 in one trade. Okay, now in any one given trade, you don't want to use 10%. So it's the 10% rule, right? So you don't want to use 10% of your capital in any one trade, and you don't want to lose 10% of that portion of your capital in any one trade. So for example, I use $10,000 out of 100,000 to make one trade, right? And then I say I'm not going to lose more than 10% of that, which is $1,000. So if the stock goes against me at 10%, which in most cases my stops are way less than 10% anyway, but if you really feel like you want it to, you can hold it till you lose 10%. Then you lose $1,000, right? You lose $1,000, you stop out, and that's your loss. Your total loss from 100 grand to 1,000 is only 1% of your capital. You see how that works? And any natural disaster, let's just say, I don't know, something really bad happens, and that company just disappears off the face of this earth, the most you lose is 10% of your capital, and you still got 90% to trade. Okay, that's how you manage your money. So again, if you use only 10% of your capital, which is $10,000, you don't lose any more than 10% of that $10,000, which is only $1,000. Then your total loss of capital from your $1,000 loss is only 1%. And that's how you manage your money. That's one way. All right. Now, obviously, if you don't have $100,000, say you're only paying with $2,000. Um, only playing 10% of $2,000, you can pretty much only buy penny stocks, and I highly recommend against playing penny stocks because they're just way too volatile and it's very difficult to control at that point. But not saying it's not possible to do, but just saying it's something that I wouldn't do. Anyways, that's the reason why I wouldn't have taken this trade, but at the same time, I did enter in a small position here. Why did I enter in a small position? Because not only are we into this 149.51 level, not only are we into this upper trend line level here, not only are we in a very oversold market. And again, before, like I said, just because you're oversold, it doesn't mean anything. But it does mean that there is more pressure on the market. So that indicates that we should be turning over shortly, soon, sometime in the near future. So what does that mean? As the market goes higher, if it does go higher, then I'll slowly enter in more shorts if I start getting more signals. Now, for example, if I get some kind of shooting star and it's on huge volume, then that's when I pick up the rest of my 20% trade within this one short trade. Okay. All right, zooming out here, if you see, this is the top of this here. Okay. At 150, which is the top of the market here, 150.25. All right, so we got this as resistance here, which is about or support, I'm sorry, 144.31. Then we're going to have another resistance point here at about 149.47. We already broke through that. Now we have this resistance level here, which is at about 152.70, maybe a little higher. Let me just zoom in over here. Okay. And then we have this one here, which is at 155 and change. Okay, so let me just delete this drawing. Let me get another drawing here. Let me get just stick it with a trend line here. And then what I'm going to do is I'm going to extend this to the right. That's not the right. Very good. And then zoom out, go all the way back to today. Bring this down just a bit, and there you have it. That's the line that I just drew right there. Okay. Whoop. Okay, this is the line, and it falls right around the 155.44 level. That is the next level, if it gets there, that I will be entering in another short. Now keep in mind, if we have somewhat of a smaller pullback, once we start, okay, so for example, once we start pulling back, okay, I will already dump my shares, break even or not, doesn't matter. I have my stops in place, and if I do get stopped out, I wait for the 155.44 if it gets there to short the market again. Now let's just say it continues higher, comes back down into 149.51. I will stop out of my short trade and then go long because I think the market still has upside to go. Okay, and the market still has upside to go in my opinion, because if we take a look, let's take a look at the weekly chart here and delete all the drawings so it looks a little bit better. This is the weekly chart. This has not changed. We have highs, we have higher highs, we have lows, we have higher lows, and now we are making still another high, or a higher high, I should say. Okay, so keep that in mind. The weekly still shows that we are, excuse me, we are bullish, and so does the daily. I just wanted to mention to keep in mind that just because you had this shooting star candle on higher volume, because it wasn't higher than the past 3 days, it keeps you safe that if you don't take that trade, that the next day you could have entered in at the very top here, okay, of Friday, or you could still enter. You could have still entered on Friday for short, and you'd probably be a lot better off. But that's one of the reasons why I stick to my rules and I have to be strict in it. But in this case, I'm breaking this one rule, which is volume, and unfortunately, volume is one of my biggest rules. It's the most strongest indicators, in my opinion. But I wanted to just kind of ease in into the market, you know, kind of go in a little at a time here. And obviously, a stop is a stop, but I'm just going to go a little, because I do think that the market should be turning over shortly. Okay. And now for the Apple chart. Okay. So here's the thing about Apple. We had this bottom trend line here that I drew a while ago, okay, and then it looks like that was pretty good support. It never actually got to the 476.39 level. Why did this mathematical calculation not work while the other ones did? Well, it's pretty simple. Earnings. Apple had earnings and they beat expectations, but their projections were not as good. And correct me if I'm wrong, and I probably am. Again, I'm not a fundamentalist by any means. I'm purely try to be purely technical at least and turn off the news. Long story short, this is why I don't play earnings. Earnings is a gamble. You want to go to Vegas and gamble? This is the kind of thing you can do if you can't take vacation. Now, earnings is more likely a 50-50 than anything else, even though you do your homework. Because it can have good earnings, good earnings report like Apple did and still go down, okay? Or go up. You just don't know. I could say like a sales guy, I told you in the previous video that Apple looks weak. And had you taken this short trade, you would be sitting pretty in a lot of money. But I'm not going to say that because I'm going to stick to my guns, keep it real, and tell you guys that I just don't play earnings. All right? So, earnings, again, like I said in all my videos, when it comes to earnings, support and resistance levels do not work. Sometimes they do, okay? Sometimes they do, but more than likely they will not work, okay? And that is why I don't play earnings because it's hard to tell when that's going to happen. And again, you know, stocks like Apple will get very volatile the 2 weeks or a week before earnings actually comes out, and that's why I don't like to play earnings a week before earnings is going to come out, and potentially a week after earnings is settled. And the reason why is this big drop here. You're going to have a lot of things going on, right? I mean, that's over a 10% drop. I mean, we got another 3% the next day. A lot margin calls are going to start happening, okay? Either up or down, right? If it was going up, then you're going to have margin calls and all this kind of stuff. You got to give that stuff to settle in. You got to give that stuff some time. You got hedge funds, you got all those big players, they're all selling off, or they got to make the decision to sell off or to hold on to it, or whatnot, right? And you know that's why it takes some time. So you want to give it some bleed in, maybe I say 3 business days, okay? um, but I like to wait a week. All right. But if you had to, um, I will not make a mathematical calculation until that week is up because I don't want to give you guys false information. Okay. But just looking at the normal technical analysis, we have this gap fill level over here. So you're going to have some support around this area here. I don't know if it's going to be a multi-day support or not, but you're also going to have some support down here. Okay, and I don't even know if Apple gets all the way down to the 370 level. All right, but that is a possibility, so just keep that in mind. But I think you're gonna have at least some support over here if you wanted to pick up some Apple. But wait, I mean, the reason why I say wait is because what if this guy, now that it's down, what if it starts consolidating? If it starts consolidating, then I think it has a chance of getting down to the high threes. All right, now here's the interesting part. All the way up here, people are saying Apple is going to get to $1,000. You know what $1,000 a share is? That's all the way up here. Okay, I was the one that's saying no, man, don't even do that. Apple's going to turn over. I didn't give you an exact price, but I was around. I did say shortly at about 680. Okay, around the 680 level. At 700, which is only a $20 turnaround or a $20 difference, Apple starts turning over, and they used to be a $700 stock. Guess what? Now they're a $439 stock. So those people who bought Apple all the way up here is feeling the pain right now. I'm telling you that right now. Especially those rich people who thought they were really smart buying probably 1,000 shares of Apple, or maybe even 100 shares of Apple. They're probably feeling the pain and they're not very happy, right? Okay, so just keep in mind that if Apple ever does get back to the $700 level, that's going to be a really, really good double top um, resistance level. But we'll get there when that happens. In any case, that's Apple. I'll get back to you on Apple in next week's video, and I'll probably have a mathematically calculated level for you if Apple continues down or consolidates for the remainder of next week. All right, so I'm already into 25 minutes. I don't believe I had any questions. Let me just double check here. All right, I think I'm good. Again, thank you very much to everybody, Favco and Shonix, and if I'm saying your names right, I'm sorry. Um, Anyways, anybody and everybody who's watching these videos, thank you very much. God bless to y'all. Hit that like button if you can. If you cannot, then that's fine too. Again, I'm not making any money off of these videos, and maybe I should brush up on my sales pitch, um, or something. Anyways, you guys have a great week. And again, if anything majorly changes, if I break my rules, um, like I did, but I didn't tell you that I broke my rules simply because I didn't want you guys to break my rule too. But rules are rules, and the only reason why I would make a video is if something dramatic changes. Oh wait, before I do that, going back to Baidu, I think I mentioned this in 2 videos ago. I had a short trade trigger here at 116.66, and I said to you guys that you could probably already take the trade at 114.25, and your resistance level would be at the 116.66 level resistance and stop. Um, so if you did take the trade at the 114.25, you are already at the 20 moving average. So I would take my profits and run. Okay. Now, also, in addition to this, if you want to play greedy, and now is the time that you can play greedy, because from 114.25 you're already at the 108 level. Um, what you can do is sell half or 75% of your shares, okay, and then put a break-even stop for the rest. And if this guy continues down and tanks, then you're sitting pretty in money. If it goes against you, you just get stopped out, break even for the remainder of your 25%. It's the time that you can get greedy if you want to, or you can just take everything off the table. Remember, Baidu has earnings on the 4th, so that's coming up. So being that the 20 moving average is here, it wouldn't be a bad thing to take your money and run. Okay. Alrighty, that's it. Good luck to you all next week. God bless, and I hope to see you in the next video.